In today's video, let's just do a review on NVDA. Okay, so quite some time ago, we had another setup that came in right around December 4th, December 5th, and it was identified by not only the timing cycles, but via the price work. So as far as the timing was concerned, we had let's see, one cycle that was a high to high 1272 came in on December 5th. We had a low to low cycle 1272 came in on December 5th. Another low to low cycle that came in on December 4th, the 1618 time cycle. And then we had an alternate time projection that came from running a prior high to low swing, which was 16 trading days, and projecting that from here, and that was exactly 16 trading days. So we did have a low that was made right into that time window for a possible low, December 4th, 5th, plus or minus a day. But at the same time, we also had a 786 retracement of one swing, a 618 of another, and then two symmetrical projections of prior swings here. Okay, so that was the setup, and now we're getting close to an important target. Now, just because we get towards an important target doesn't mean that the rally is going to definitely end, but it does mean that it's in the position, when it does extend its prior swing, it's in the position for a possible pullback. Okay, so we don't know if the pullback is going to happen or not, but since the odds increase for that, it would be a really good idea to ratchet up your stops, because many moves do terminate at extensions of prior swings, and we're getting close to that first target at 229. This does not mean that we cannot go to the next target, which is 242, or even the next target after that, which is the 280 area. It just becomes where the odds are higher that you can potentially terminate this move once you get into these extension areas. So what do you do with that? Well, how about you just ratchet up stops, and if you don't get stopped out, then that's great. Then maybe it goes to the next target and the next target after that. But it is still a good idea to ratchet up stops. So the way that some people do that, well, one way is you can place a stop underneath a prior swing low. So maybe you have that underneath 211. But do you really want to give back that much if we get that much of a pullback? I don't know. Some of you might not want to. If you want to make it a little bit tighter, you can have a stop underneath the symmetry. So this is where I'm taking 100% of those prior declines within the uptrend, and as long as we don't go deeper than those prior declines, then you're probably okay. So if you use symmetry for a stop, you can say, well, the stop can be underneath this 214.82 area. If it holds above there, then it's probably going to go towards that next target, and it's probably okay. And of course, if you want to have it even tighter than that, what you can do is you can go down to a lower time frame chart and maybe look at something like a 15-minute, and you can say, well, I'm going to have a stop, or I'll use this for a crossover on the flip side to say, well, if it breaks, because one of the original triggers would have been when it had the 834 EMA crossover to the upside. Well, now that it's getting close to resistance, you can also look at the 834 EMA and say, well, if it crosses back below, maybe you want to ditch the position at that point. So there's a number of different ways that you can trail up a stop. And like I said, I wouldn't be surprised if we do just continue higher towards the next targets. But this is a really good time to start ratcheting up your stops, because after all, this setup started here and we're up here now. You really don't want to have your original stop in place down here where, this ends up becoming a losing trade. All right. So that's what I have for NVDA, and I'll see you tomorrow.